नमस्ते दोस्तों। मैं हूं अंकित कानोडिया स्मार्ट सिंह सर्विसेज से। जैसा कि आपने हमारे लास्ट फ्यू वीडियोस में देखा होगा कि हम लोग अपने एजुकेशनल प्लेटफॉर्म मिशन स्माइल से काफी पुराने पुराने वीडियोस जो कि स्पेसिफिक एक कंपनी से रिलेटेड हो उसको हम आपके लिए शेयर कर रहे हैं। सो आशा करते हैं कि आपको ये वीडियोस अच्छे लगे। और मेन पर्पस ये वीडियो का दिखाने का ये है कि आज आप देख ही रहे हो कि मार्केट में जनरली कितना वोलेटिलिटी है, काफी स्टॉक्स गिर भी रहे हैं। ऐसे टाइम पे रादर देन वरिंग अबाउट कि मार्केट कैसा होगा, कल क्या होगा, प्रेडिक्ट करने में और एनालिसिस पैरालिसिस में जाने से ज्यादा अच्छा होगा कि हम डीप डाइव करें अच्छे बिजनेसेस के ऊपर में। तो जिससे हमें एक आइडिया भी मिलता है कि कौन सी कंपनी क्या कर रही है, उसमें क्या रिस्क है, क्या पॉसिबिलिटीज है। और साथ में आपको उसमें से कोई कंपनी अच्छी लगे तो आप उसे अपने पोर्टफोलियो के हिसाब से भी इवेल्युएट कर सकते हैं। हालांकि जैसा कि हम हमेशा बताते हैं कि डोंट टेक एनीथिंग वी प्रेजेंट ओवर हियर एज अ रिकमेंडेशन टू बाई और सेल। एक इंपॉर्टेंट सूचना आपको ये भी दूंगा कि आज से हमारा ये चैनल पे जो हम लोग हर हफ्ते एक वीडियो डाल रहे थे, आज से हमने डिसाइड किया है कि अब हर हफ्ते दो वीडियो डालेंगे, एक वेंसडे को और एक सैटरडे को। सो आशा करता हूं पिछले दो तीन वीडियोस के हिसाब से ये वीडियो में भी आपको काफी डिटेल्ड अंडरस्टैंडिंग होगी बिजनेस की। और जिस बिजनेस की बात हम लोग करने वाले हैं वो है यूरेका फोर्ब्स। यूरेका फोर्ब्स एक बहुत ही इंटरेस्टिंग कंपनी है। यहाँ पे रिसेंटली लास्ट दो तीन साल के अंदर में इनके प्रोमोटर्स भी चेंज हुए हैं, प्लस इनका मैनेजमेंट भी चेंज हुआ है। तो ये जब भी कभी कोई बिजनेस में इस तरह का चेंज होता है तो वो बहुत इंटरेस्टिंग बन जाती है फ्रॉम एन इन्वेस्टिंग पर्सपेक्टिव, क्योंकि मार्केट इन जनरल चेंज को बहुत जल्दी नोटिस करता है एंड रिवॉर्ड भी करता है। सो अगेन दोहराऊंगा कि आई एम नॉट मेकिंग एनी रिकमेंडेशन। आई एज अ सेबी रजिस्टर्ड इन्वेस्टमेंट एडवाइजर आई वांट टू मेक अ डिस्क्लोजर। आई डोंट हैव एनी होल्डिंग इन द बिजनेस, बट ये एक इंटरेस्टिंग बिजनेस है तो आपको जरूर देखना चाहिए। तो हमेशा की तरह पेन और पेपर लेके बैठ जाइए, नोट्स बनाइए, क्योंकि सिर्फ आज नहीं देखना है, आपको इस नोट्स को आगे भी देखना है। राइट। थैंक यू। हेलो एवरीवन, this is Ankit Kanodia from SmartSync Services. SmartSync is a SEBI registered investment advisory firm based out of Ahmedabad. And welcome to the 38th Mission Smile webinar. Yes, you have heard it right. This is our 38th Mission Smile webinar, and we have been doing it for more than 40 months. I think 1 month we missed because of COVID, and our effort is always to constantly and consistently present on themes which we as a team of SmartSync services find interesting. So water as a theme is very famous or very in the news. So, water projects companies plus pump companies, those are all in the news, and we are discussing about it, and we are hearing the discussion on WhatsApp groups and social media and whatnot. But there is this one company which we feel is not being discussed much in the news. So we thought we'll probably go through it and understand. But when we deep dived into the company, we found it really interesting. And the objective of today's session is just to share with you what are the possibilities for these for a company like Eureka Forbes in the future. And before I begin, uh, I'll just share the normal disclosures. So I and my company, we do not have any position in the stock, and neither have we recommended the stock to any of our clients. And even though we like the business as of now, and we'll talk about all the positives and negatives, but don't take it as a recommendation to buy or sell. And we have not received any compensation from the management of the company to present on this company. It's an independent research, and we'll try to be as unbiased as possible, and as always we are open to discussion. So it's good to be back after a long time. I think Shivam has been presenting on Vision Smile for a long, and he's doing a fantastic job. but for a change, I thought that I'll come back and see whether I can present or not, or have I forgotten how to present. So let's see how it goes. So I have a lot of slides, but what I'll do, I'll not make it a monologue that I'll complete all the slides and then only you can ask question. So whatever questions come to your mind while I present, whatever you see on the screen or you have come across regarding this company, please keep typing them on the chat box. And as and when I'll take breaks in between and we'll take up questions as well. So it will not be like I'll present the whole slide and then I'll take the question at the end. Okay. So keep sharing your question on the chat box. Okay. So let's begin now. So I'll start with this, and I don't know how many of you understand what I'm trying to say over here. Can anybody mention in the chat box? What is this? Anybody except my team members at SmartSync Services? Can anybody explain? What do you see here? Okay, I don't see any answers yet. I'll just wait for 10 more seconds. If nobody answers, then I'll go ahead. But I thought this is fairly simple. Okay. Sure. So let me tell you. I'm sure all of you would have heard about Abraham Maslow's need hierarchy theory. It is nothing but that. Purposefully, we have not shared the levels of the hierarchy, because if you would have written the name of the hierarchies or all the levels, it would have been much more easier for you. But if you see here in the bottom, I'm talking about this triangle, right? In the bottom, you see stuff which are very, very essential for our living, right? Then the second layer is where we look for something which is comforting, right? So after like as we say in a very crude way, roti, kapda and makan ho jata hai, so then we think about other comforts of life, right? Like refrigerator, fridge, AC. These used to be these things which will give us comfort, right? And after that, there are multiple levels. I'll not go into all the levels because that is not a part of that is not relevant to our discussion today. But the point is that this gentleman wrote a paper way back in 1943 about human nature, human motivations, and the way we think. And what is fantastic about this thing is that even more than 70, 80 years later, today, it works exactly the same. So, and it is not just in terms of individuals, but also in terms of group of individuals or maybe nation, right? So if you look at this is a simple chart which we have all seen of India's GDP per capita in dollar terms, right? So we were less than 500 in the 90s, and today we are close to $2,000 per capita, right, of GDP. Now, and it is expected that maybe by 2030 we'll reach to close to 4,000 GDP per capita, right? Now, what happens when a company goes through this kind of growth in per capita income? And I think this is very clear, right? So before going into this data, I'll just give you a very simple example again. First, if you look at a country like India, first everybody needs a home, right? Majority of people even today don't have a home in India, right? So once you have home, then you will probably have very basic thing. I'm talking about a very normal layman with limited means and limited finance would first look for very basic stuff like say light and fans and all those things which make the bare living possible, right? But as and when your income increases, household income increases, you tend to afford something like a refrigerator and a washing machine, right? Once you manage to get those things, then you move on to the other things, right? So as you can see, this is a independent research report by Technopark, and they mentions over here that you can see that refrigerator and washing machine are two categories where we have fairly penetrated those categories. So I remember, if you talk about me, when I was growing up as a kid, we never had even refrigerator at our home. I'm talking about the 90s. Okay. It came much later, towards the fag end of the 90s. Now, but today, in 2024, it's very, very, very difficult to imagine home without refrigerators. Refrigerator is no more a thing of comfort. It is a bare necessity without which we can't live, right? But there are so many other categories also where still penetration levels are very, very, very low. So as you can see in the screen, air condition, you can see still only 7% penetration. And when you go to the categories of water purifier, vacuum cleaners, and air purifiers, those are even lower than what we have seen in the air conditioner space, right? So the company which we are going to discuss is present in all these three categories. And you can see over here, even if we compare our India's penetration in water purifier and vacuum cleaner, we are way, way, way below what the other countries are. And I'm not talking about US or Europe. I'm talking about countries which are at par with India, right? Where India is comparable to them, like Thailand, like China, like South Korea. You can see both in terms of water purifier and vacuum cleaner. So vacuum cleaner, I think there is a reason for vacuum cleaner penetration being very low is also that in the Western countries, the culture of having the carpet in your room on the floor is very, very, very common. Even in an average house, you will find carpet. But in Indian homes, that concept has not taken off in a big way. Generally, we find carpets only in ultra wealthy families, right? And there also, what we can see is that some rooms will have those carpets and some will not have, right? So that could be one of the reasons, but things can change here as well, right? As we go along. But the main point of discussion today is that these are the categories where penetration level are very, very low. And that is where comes this company, Eureka Forbes, which is pioneer in these categories in India, be it water cooler or air purifier or vacuum cleaner, right? So it's you can see on the screen these products images, and you can understand, right? Now, a fairly simple agenda for today's meeting. Many people are not aware of the history of Eureka Forbes, the different owners over the last few years, in fact, last few decades, the recent change in the management, what we really like about business. We will deep dive into business. What are the aspects of business which we really like? What are several mental models we are going to touch upon, which resonate with the business of Eureka Forbes? And then we have the investment thesis and antithesis pointers. And then we'll talk about the financials and valuation. So this company got listed 3 years ago only. So there is only limited financials in the public domain. So, but we have tried to cover as much as possible, even in the financials part, the major important things which you need to understand, right? So let's begin. I'll just repeat again. If you have any questions anytime, you can type on the chat box and I'll take it from time to time. So these categories, in fact, some people find it hard to believe that vacuum cleaners were introduced in India in 1982. right? And water purifiers came in 1984 because there are so many homes in India. In fact, my home doesn't have a vacuum cleaner. We have never used vacuum cleaner at all in our life till now, right? And water purifiers is still very common in homes nowadays, but still, as per the data, the penetration level is very low. So we should understand a product or a category which was introduced, say, 40 years ago. So even in 40 years, you have got only 6% penetration in water purifiers and 2% penetration in vacuum cleaner. That tells you a lot about the demography and also the kind of population we have and the kind of households we live in, right? As a nation, right? So this is the brief history and some of the important events. So in 1982, Eureka Forbes was started by a JV between two companies. So one of the company was basically Tata owned. This Forbes and Campbell was a company which was owned by Tata. And then the other company was a Swedish company, Electrolux. So 60% Tata's share and 40% Electrolux share. And that is how they started in 1982. They launched vacuum cleaner first and then water purifiers. 2013, they acquired a controlling stake in Lux International, again, a company which is in Europe. And sorry, I forgot the 2001 and 5 part. So in 2001, Tata Group actually sold their stake to Shapoorji Pallonji Group, right? And the Swedish company, which is Electrolux, they also sold their 40% stake in Eureka Forbes to Shapoorji Pallonji in 2005. So from 2005 onward, the whole company was owned by Shapoorji Pallonji, right? And 2010 is when they acquired 25% stake in a Swiss consumer product company, Lux International. And by 2013, they had a controlling stake in that company. So this is the company from where they got the air purifier business. So whatever air purifier today you see under the banner of Eureka Forbes, a significant contribution of that is by this Swiss consumer product company, Lux International. Okay. So I'm sure many of you are already aware that just during the COVID times, in fact, just before the COVID times also, Shapoorji Pallonji Group was having a lot of debt-related problem in their group, and they were trying to sell a few assets under their ownership so that they can raise cash. So Eureka Forbes naturally became one of the asset which they wanted to get rid of because they were unable to scale it up in the manner they wanted to, right? And there were other issues also which I'll discuss in the subsequent slides. So Advent International, a very reputed PE firm, they basically won the bid and they bought out the stake of Shapoorji Pallonji, and company was valued at 4,400 crore at that time. And I'm talking about 2021. And they listed the company in 2022. And today, you know that around 9,500 is the valuation of Eureka Forbes in the stock market, right? So Advent International probably did a fantastic job for themselves by buying the stock or buying the company when the valuation was cheap because the promoter was looking for an exit. And they have done some things which I'll cover in the subsequent slide, which will help you understand much better. But while they bought this, the demerger and there were 3 rules which was very clearly laid out. that they will have to demerge Eureka Forbes from the parent company, list it in on the stock exchange, and do an open offer. And Advent can purchase up to 72.56% of Eureka Forbes outstanding stock. Now, if you look at the current ownership, the Advent's ownership is currently down to 62.56 because recently they sold out 10% of their stake. This is one of the risk also when the promoter is a PE firm, because PE firm and the founding promoter, they have different ideologies, right? So founding promoters do not look at exit. They hold on to the company for a long period of time. And not just long, they continue to hold to the business till the time the business is, they can manage the business well, right? But in case of a PE fund, they have a fixed life cycle under which they want to generate return from this for themselves and also for their investors, right? So that is why that 72.56% has now come down to 62, because in the last 2 years, the stock has done phenomenally well for these guys. They've made a 2x return in a short period of 3 years, and they lighten their stake and expect this action to continue in the future as well. As the company will progress, as the market cap will increase, slowly Advent will get out of it. You can look at Advent's past investments in so many other companies, and you will find the same thing, right? Another big thing which they did just after Advent purchased the company from Shapurji Palonji Group is that they changed the top management completely. So all the names over here you can see, you can go and check on LinkedIn. We actually did it for all of them. All these people are people who have been on the board or on the management team only after Advent took over. So Advent took over in 2022, and this team was developed either at the end of 2022 or at the start of 2023. And the first name which you can see on the top left side is Mr. Pratik Rashmikant Pota, who is now made the MD and CEO. And I am pretty confident that most of you who are attending this session live or would be watching the recording already know what an illustrious career Mr. Pota has. Just before joining the Eureka Forbes, he was instrumental in scaling up Jubilant Foodworks, which basically is the company which owns the license for selling Domino's pizza in India. Even it's not just Domino's or Jubilant. Prior to that, he has worked at leadership position in several FMCG companies. So he has a very wide and rich experience of these things. And that is why he, along with his team, in just 2 years, have made a lot of positive change in the company, which is visible in the numbers, in their strategy, and how and in the direction in which the company is moving. Okay. Now let's deep dive into the business. Okay. I'll come back to the new strategies which Pratik Pota and his team has instilled. But let's first start with the business. So as I said at the start, 4 decades of bringing happy, healthy, safe, and pollution-free living to customers. Okay, they have just 3 categories: water purifiers, vacuum cleaners, air purifiers. And the best part is water purifiers and vacuum cleaners, in both these categories, they are market leaders. So in water purifiers, they have 40% market share, and in vacuum cleaners, they have 60% market share. In fact, if you go back to pre-COVID times, somewhere in 2018 and 19, current turnover of Eureka Forbes is around 2000 crore. But pre-COVID, they were actually doing 3000 crore of sales. And the market share of water purifier was actually 60%, sometimes in 2017 or 18. So the market share has actually gone down in the last few years. This has been the revenue contribution. Now, you could see that vacuum cleaner and electric water purifiers, they contribute the bulk of the revenue. And air purifier is negligible, uh, around 2% or 3% of their total revenues by air purifier. It's a very small section right now. But the interesting part of this business is the service, which you can see 36%. This 36% service basically means AMC business, right? So annual maintenance charge, which they charge to their customers. Now, this is a very important portion of their business where once you buy, say, a water purifier from Eureka Forbes or any other company, be it Kent or any other competitors of Eureka Forbes, you can't just it's never an isolated sale that where you just bought the product and you then don't need any help from the company. The company's person will come and install the product at your home, and then you will also need from time to time service from the company, because all the time the filters and the other technical aspects of the purifier will not work as per your liking, right? So you need to get service. So they have these AMC contracts. I'm not going into detail right now because in one of the slides I have covered only about that, and we'll get back to that once I reach there. Okay. This is the total addressable market. So as of now, you can see water purifier has around 4,000 crore market cap, addressable market. But this 4,000 is expected to go up to 10,000 by FY30, right? Just the water purifier service market is going to be equal to the water purifier product market. Because as and when you start selling more and more water purifiers, you also need service for those. So that market will grow at a slightly faster pace compared to the product market. Water softeners is again a addressable market, but it's a very small market as of now. Same with vacuum cleaners and air purifiers. The market overall is very low, is very small compared to the water purifier market. But net in total, if you can see, today's addressable total market is about 10,000 crore, and it is slated to slightly go beyond doubling, around 23,000 crore by FY30. Now, people often get confused that 10,000 crore ka market cap abhi hai and आगे 23,000 crore का market addressable market is 10,000 crore today, and addressable market say in FY30 will be around 23,000. Then Eureka is already in 10,000 crore market cap. So how much bigger the company can be? So this addressable market always means the sales, right? And FMCG companies always trade at a multiple of sales. So that sale multiple typically is between 3 to 5. If we don't take the really highly valued FMCG companies which are trading at 8x sales or 10x sales, the general multiple is about 3 to 5 times sales. So when the addressable market is 23,000, the addressable market cap could be about 5 times of that, which is about 1 lakh. But 1 lakh will be the total industry market cap. And if, say, for example, something like a Eureka Forbes can get a lion's share of 40-50%, so there is a scope of 40 to 50,000 crore market cap for Eureka Forbes, provided they execute their work and the market grows as per this projection which has been done by this independent study, right? So this concept, many people get confused, and we have been asked, some of our members have also asked us in email and DM that how come such a small market, and how can companies market cap be more than what is the addressable market, which is shown here, right? So any question till now? Anybody has any doubt? We can take up. Okay, I don't see any hands being raised or any questions on the chat box. So I'll continue. Now, I don't know how many of you know that I am a big fan of Mr. Utpal Seth, and Mr. Utpal Seth needs no introduction. We all know how he has been instrumental in growing the fund of Mr. Rakesh Jhunjhunwala and his family, Rare Enterprise. And there is a famous 2019 CFA Society video or interview of Mr. Utpal Seth, where he talks about megatrends. And I have that, I've probably watched that video maybe 40, 50 times till now in the last 5, 6 years. And while looking at long-term themes, I always try to see whether a business is, I use that as a checklist where if it's a long-term theme, it must tick some of the boxes in case of the mega trends, right? So there are about 9 mega trends which has been listed in that video or the PPT. Harshal, probably you can share the link of that video on the chat box so that people who would have not seen that video can probably have a look at it after the session. Yeah, thanks. So out of those 9, I think in case of Eureka Forbes, these 4 mega trends are very clear where their products and their business will be benefited because of this trend. So urbanization, we all know, see, when you are in a small town under a family, a joint family, there are very limited needs, and we work in a different way. When you move to cities or larger cities, then you tend to understand the value of these kind of products. And how you understand value? You just look around yourself and you see other people using these products. You also do that. So that is the main part of urbanization. When you move from a small town to a bigger town or maybe a big city, then you will start valuing the value proposition which is offered by these kind of products, right? Second, women's participation in the workforce. So even though the data as of now says that women participation is very low, but it is expected that over the upcoming years and decades, this participation should definitely go up. So when that happens, again, many of us who are present here, if you have your wife working, you understand how important it is for you, and you manage your home in a different way, right? So you don't have, like, historically, if you see how we used to purify our water, there were 2 ways. One was people used to use cloth, and the water would pass through the cloth, and then you will consume which is a very unhygienic way of consuming water. The other way was boiling the water. Okay. So none of these ways actually help you to completely get rid of the bacteria and other particles which are not good for consumption. That is why it is important that you should purify your water, right? And you use water purifier. But the more women going into workspace, they get broadened about these ideas, and then only they implement that, because these things generally get implemented by women, right? So the more they'll go out, they will find the value proposition, and they will uh, start using it at their home as well, right? And the third is consumption. Consumption, again, we should understand, again, I think I alluded to this part at the start as well. Consumption is a theme where each household and each country goes through a cycle. So first of all, you will start with the basic staples food consumption, wherein rice or wheat, these are the basic things which is very important for you, and products related to wheat and rice, like say, so for example, bread, right? Those are very essential uh, products to consume. Any household or any country will first see a huge rise in consumption of these items, which are very, very necessary for a day-to-day life. Slowly, over a period of say 20, 30, 40 years, the economy mature, the lifestyle of people get upgraded, and then they move from the staples to other categories of items which enhance the quality of their life. So water purification is, there are many other things also which falls under that space, but water purification is the space which definitely gets triggered when that happens, right? And the fourth one is again very fairly simple, where is, as we move from an unorganized society to an organized society, or an unorganized market to an organized market, we find value to these products, right? So there are other tailwinds. So in the previous slide, I talked about the mega trends, but there are other things also which may not be a mega trend, but are fairly long tailwinds which benefit to a company like Eureka Forbes in a big way. So like piped water itself, this piped water data, if you see, from 16.8% in 2019 is now 77.2% in 2024. And you can see why pipe companies have done well, right? You can see over the last 4, 5, 6 years, so many pipe companies have come to the market, got listed, and they've done well. And that is very clearly understood by this particular data, wherein the demand for pipes have gone like bonkers because of the use of pipe for supply of water, right? Electrification, again, go back 10 years, 15 years, there were a large part of the country which was not electrified at all. And with the efforts of the government, the electrification has also reached a certain stage where you find electricity not just in towns and cities, but even in the remotest of villages nowadays, right? Uh, I don't know how many of you have actually faced this issue, but I'm sure some of you for sure would have seen this, is that unpredictability of domestic health. Like, look at countries like US or Europe, where a middle class family or even an upper middle class family cannot even think of affording a domestic help, because they are so expensive that a normal family cannot afford that. Only the really wealthy or affluent families have domestic help in the Western countries. I would not say that India uh, is going towards that stage very soon, but we have already seen some things like 10 years, 15 years back, it was easy, or the bargaining power was more towards the owners of the house, but that bargaining power is slowly, or maybe even in a fast way, shifting towards domestic help, because they know that how important role they play for our households, right? So that is also one reason why you need products like, say, water purifier, or say, for example, vacuum cleaner, because your domestic help is not going to uh, is probably very unpredictable, and you need some convenient backup just in case. Uh, because even if you look at your cities or towns, there are certain areas where it's not easy to find domestic help, right? And the last one is, as we all know, this is self-explanatory, where importance is given to health and hygiene. This was something which, uh, again, in the past, when I was growing up as a kid, I never heard about all these things from people around me. But today we talk a lot about it. Even the kids at home are also very clear about washing their hands and following the basic health and hygiene practice. I think COVID had a lot to do with it. And these things again will continue to even grow further from here. You can't go back from here, right? So this, so in case of AquaGuard, these we have talked about the high level thing, wherein what are the tailwinds and what are the mega trends which help them. But there are some things inherent in their business which also makes their business model very robust. I should not say anti-fragile, but it's very robust, right? So you can see the kind of IP data. They have 14 million plus IP data. It is a very, very, very well-known brand. Of course, there are issues with services, and we'll come to that in a bit. But there is no denying the fact that it is a very well-known brand, and it also had a first mover advantage. These all Kent and this HUL brand. I'm forgetting the name. Pure It is the brand which is of HUL, but they have recently sold out that brand, that business. So all these brands have come much later. So they have this brand power. AquaGuard, people can, the top of the mind recall of everyone in the country, just by hearing the name AquaGuard, you can make out that this is about water purifier. Their channel, omni-channel GTM, is also something to talk about, where they have 4,200 plus frontline team, both in case of direct sales, retail. So their presence in all the major channels. E-commerce and D2C is something which I think they are still trying, and there are huge scope to further improve there. In terms of pin codes also, you can see 19,500 plus pin codes covered means almost the 70-80% of the country has been covered by them already, right? So it is not about reach, it is more about the volume growth, right? Now, as I mentioned, that the new management which joined the company in the in the second half of 2022, and some people joined in the first half of 2023, there they uh, focused on a business transformation project by the name Udaan, where they realized that this is a business where there is a lot of potential, but in the previous, when under the previous management, a lot of initiatives were not taken place, and that is why the brand was not doing as well as it should have post-COVID, in the post-COVID era. Okay, so these are again very simple to understand this thing. One is the penetration, growing the water penetration, expanding the portfolio in terms of convenient air, cleaning air. So air uh, mm, air purifier is also a big area, and it's a growing area, because again, in the past we never heard of something like air purifier, but now because of the awareness of general people about the poor quality of air at different parts of the country, this is something also which is taking a lot of attention of the consumers across the country. Third is the service area, which is very, very, very problematic area for not just Eureka, but also their other competitors. So they must work on it. And if you go through the con calls of their, so since it's a very fairly new company and got listed in 2022 only, you can see there are about 4 or 5 con calls. So you don't have to read much. तो अगर आप ये चारों पांचों कॉन कॉल का ट्रांसक्रिप्ट पढ़ोगे तो you will get it very clear that the management themselves have clearly understood this as a big problem area, and they are solving. They have already started working on that. Okay, and then building this D2C platform using tech. This is also something which they are focusing on now. Just in the span of 1 year, you can see how it has significantly improved the company's position. So I always like looking at businesses where the core business or the core asset is fantastic, but probably the previous management was not efficient enough to manage. I'll give you a very good example. We covered this company. Actually, this company was covered in our first Mission Smile webinar. If some of you would remember, and the name of the company is Tata Consumer Product. So Tata Consumer Product also had the similar pattern where company had some really good brands, but from 2007-8 to 2020, the company was sleeping. And why it was sleeping and why there were no growth? Because the previous management didn't have the fire and the hunger in their belly that they will work in an efficient manner. What happened in 2019 after Mr. N. Chandra taking the helm at Tata Group? He immediately put a new management team for Tata Consumer and laid out a new strategy. And look at how Tata Consumer Product has grown just post-COVID, both in terms of sales, in terms of profits, in terms of cash flow generation, and also in terms of increase in market cap or share price performance, right? There are, and as an investor, we should look at these similarities, even though probably there is nothing common between Tata Consumer and Eureka Forbes in terms of the kind of products and markets they are in. But this is a very similar pattern where good business or a good asset coupled with bad management getting changed, and the new management starts with a very clear strategy and starts not just with a strategy, but start executing well. So in just 1 year, you can see how volume growth, which was negative, has already been to double digit in FY24. Revenue growth, which was low single digit, it is still low single digit in FY24. And again, if you read the con calls, you will understand the reason the revenue growth has been low is because they are not just being able to grow their new products at a strong double-digit growth, but they are also stopping some of their older categories which are redundant or which are not useful for the customer or which are not profitable for the company. So while you see a huge volume growth in the new categories or the new products which they are launching, they are also letting go of some of the old categories which are not useful for them anymore. But in FY25 or FY26, you will see, because a large portion of that has been already done in FY24. So incrementally from here, in FY25, we should expect revenue growth in at least in the low double digit, if not more, right? Similarly, you can see it was loss making in FY22. It is already 10% EBITDA. Debt, it was a net debt company. Now it is a 100 crore net surplus, cash surplus company. And market share, as I said, 60% was the market share. It kept on going down from 2018 till 2021-22. But from there, in FY24, this was the first year where they have seen increase in market share as well. Okay, so these things give you confidence about the scope of the business, because it talks about two things. One is the execution capability of the management, and the other thing is the core attractiveness of the business. However good the management be, if the business itself is not that great, it will not be able for a management to turn around the things in such a short time, right? So this gives you a lot of confidence, both in terms of the management capability and also in terms of the business prospects, right? Now, these are the key initiatives which they have again taken, and you can see what are the outcomes. So while I'll not read all of them, you can see, you can watch the recording, you can note down later on also. But the main part was that the whole idea is that we will grow the revenue, grow the volumes, and we will also contain the cost, because even though today, right now, I don't have the numbers of Kent and Eureka are comparable companies. But when you look at the expenses or the margins in Eureka, it is completely not comparable. So they both have about 60% gross margin. In case of Kent, the net profit margin itself is about 20%. Okay. But in case of Eureka Forbes, you can see it is close to 5% now, right? So that itself tells you the scope of improvement in the financials going forward. And again, this brings me to another key pattern which I have noticed in whatever limited investing career I have had now. The biggest money is made when there is an change happening, or where there is an expansion in ROE because of these kind of initiatives which we are talking about here. A great company doing good things are generally already priced in, right? But only when the company goes through a problem, you will find those companies available at a reasonable valuation. I'm not saying right now that Eureka Forbes is available at reasonable valuation, but I'm talking about turnarounds. I'm not talking about turnarounds where it is completely sick unit or in a BFIR case. Those are a completely different investing opportunities, and there are multi-baggers in those kind of opportunities also, but there is a high element of risk. But when you talk about businesses like this, where the core asset on the core business is very good and very high ROE generating and very less working capital intensive, good execution by a good management on top can really scale up the business in an efficient manner and can lead to a huge ROE expansion. And whenever that journey of ROE expansion happens, where your ROE go from say 3% to 5 to 10 to 15 to 20 in a span of say 3 to 5 years, that is the time when market rewards you fantastically. Okay, I'm not saying it will happen for sure for Eureka Forbes, but this is again a pattern where Eureka Forbes fit in, because the ROE right now, if you go to screener, there is another aspect of ROE which we'll cover in the slide when we move to financials. But let's now just focus on the screener numbers which we see. These are abysmal ROEs at which they are working right now, and there is huge scope for that to improve from here. Right, and you can see the outcomes already. The product revenue growth has become 13%, 17% other expense reduction versus FY23, 36% headcount reduction, and they've used that cash being saved through headcount reduction to fully reinvest in the capability creation, right? When I'm talking about capability creation, they're talking about R&D, innovation, and also some marketing, right? 2x capex increase they have done, and ultimately it has all related to led to a 300 crore cash generation, which basically helped them to completely set off all their debt. Okay, so phase one they have already done. Now, so again, there are different phases in which many investors invest in the market. Some investors find it more comfortable to invest in phase one, where there is more uncertainty. So when there is more uncertainty, the stock will be available at a much more attractive level. But the risk element is also high at that time, because you don't know whether the management or the business has the attractiveness to turn around itself, right? When phase one is already done, you will probably have the stock at a much higher valuation compared to what it was at the start of the phase one. But over here, when it is entering phase two, your risk about the business direction goes down drastically, right? So you always need to keep that in mind. So you can't look at Eureka Forbes in FY24 and think that FY22 का price मिलता तो ले लेते. You may get market can create opportunities. If you get that, that is fantastic. That in phase two, like as in today, or maybe somewhere in the next say 6 to 9 months or 12 months, if you get Eureka Forbes at a valuation which it was trading at say a year back, when there were a lot more uncertainty and it was in just phase one. Now that the market has already seen some track record and the market's trust for the business and the management is far more higher today than it was say a year from now, right? So what is phase two? Again, the same sustained growth, step up growth investment. So when I'm talking about step up growth investment in a typical manufacturing business, people take this as a capex. But in case of a company like Eureka Forbes, they don't need any capex to grow up their sales. They have enough capacity inbuilt already. So what they actually mean by step up growth investment is, again, you need to go through their con calls and their presentation and the management interviews. They clearly say that with with the growth investment, they mean stepping up the advertisement and marketing and R&D expenses, okay, or investments. And margin improvement is something which it will be an outcome of all these things, right? So we'll now go to some of the mental models which work over here. I'll just take a pause. If anybody has any question, if you want to ask, I'm happy to answer. I'll just wait for 5 seconds. If anybody has any question, you can either raise your hand or ask in the chat box. Okay, great. So now coming to the mental models and patterns. So turnaround, we have been talking about turnaround already here. There is operating leverage at play because you have the built capacity already. Now what is your major expense? Major expense is your employee expenses, right? Now, when you have paid for those employee expenses also, these are all fairly fixed expense. As and when the number of units sold increases, and because of increase in units sold, there is a very good recurring revenue which will come through the AMC business or the service business. You will find that the operating leverage will start playing out, where you don't have to incrementally do any more expense and you incrementally increase your revenues. That will lead to higher operating margin and also higher PAT margin, right? And as I said, I don't know whether they'll achieve 15% or 20% and how much time it will take. But we have Kent's number where Kent does a 20% net margin. So ideally, they should reach that level in the future, right? Management change, we have already discussed. I'll not go much into that. Management in their con calls and presentation mentioned that for any new incremental revenue because of the new categories or new or growth in the existing categories will lead to 100% incremental ROE because they don't need any new investment or new capex for that. So incremental ROE will be 100%. Okay. Negative working capital is again, most of you already understand this because the quality of business is such and they have a high service element where you take a 1 year, 2 year, 3 year, or sometimes 4 year contracts as well. So they have, I think, 1 to 4 year contract is what they typically have. So you get that contract money in advance and you have to pay, you have to serve them over the next, say, 1 year or 3 year or 4 year period. So you get benefit there. Plus all their products are sold in cash through the retail chains and all. And to their suppliers, they get some time to pay to their suppliers. And that is why they have this negative working capital. Okay. Now, what are the investment theses? We have already covered. Most of them we have already covered. Under penetration. This is a category where penetration is still very, very low. So that gives us a pretty long-term runway for the company to do well. Market leadership. So as we mentioned in one of the previous slides, in both the categories where they are present today meaningfully, they are the number one player in the country, right? Third, and more importantly, one of their competitors, HUL, is selling its water purifier business. It's by the name Pure It. Even if you go to Amazon, you will see these Pure It, Kent RO, even these guys like I'm forgetting the other another one which is also there. I'll probably share it after the session. So a large competitor. So after Eureka Forbes and Kent, the largest player in the organized market is HUL only. So if they are also selling their water purifier business, that means market is consolidating and it gives it is an advantageous situation for a player like Eureka or Kent. Strong management team. I have spoken a lot about it. I'll not say any more. And similarly, hunger and aggression to transform. So I'll just anyone who is interested, who wants to know more about the business, I will say just start with the investor day PPT and con call transcript. That gives you a very good idea as to what the management has done. I think it's a 90, 93 or 95 page deck. It was released in June only. And that is where we started studying about the business and we really like the way the management has gone through their task in the last 1 year, right? Let me just check. No, if this segment, this is a good question. Priyansh asked this. Actually, he sent me the question in direct. I'll just read out his question. If this segment is attractive, why is HUL selling? See, people or the companies sell because of multiple reasons, right? First of all, under penetration doesn't guarantee that you will be able to do well. There are many categories of products which are under penetrated in India. That doesn't, under penetration itself doesn't guarantee you success in any segment. Yet I'll give you an example of, this is my favorite example. I think I would have covered this example in the past as well. So you look at company like Zydus Wellness. So Zydus Wellness started predominantly as a sugar substitute company, as in their brand sugar free has 90% plus market share. I don't know what is the current market share, but I think 3 years, 4 years back, it was 90% only. I think even now it's 90%. But you look at there when you are a 90% market share in a company, in a category, it is the onus is on you how you grow the market. You can't wait for the market to grow on its own. You have to take the initiative and grow the market. But you look at that segment, it has not grown at all. And that is why there was, even though there was not much competition also, but still they have not been able to scale up that business. In fact, in the last few years, they have not even shared their actual revenue from that segment because it has been flat in the last several years. And all the growth in that business of Zydus Wellness has come through acquisition from some other company, a few brands, and that has contributed to their growth, right? Similarly, in case of water cooler also, even though water cooler has been there since last 40 years now, even then the penetration level is very low and it's not easy to sell. Still, a large portion of the population do not find value in it. So it depends upon all these companies also to make sure that they provide the right kind of awareness and create the right kind of price points, which will uh, help them to do well. In case of HUL, they are into hundreds of different categories, which are already doing so well. So why will they? So if this is one category which they entered some time back, and if this category they have not been able to do well, from an HUL's point of view, it makes sense. In fact, I would say that they're doing the right thing by selling this business because uh, they have not been able to scale it up. They are not getting good margins or good ROEs from this, and their capital is finite. They want to take that capital out and invest in so many other businesses which they have, right? But in case of Eureka folks, this is the main core business. They don't have any other business, right? They are not like HUL. And because they have been pioneer in this business, they already have the brand power, the superior margins, the consumer knowing what is important, consumer knowing about the brand. So selling is also easier for them compared to something like Pureit, which is I even didn't know about Pureit till the time I started reading about Eureka Forbes. Okay, but I'm sure even though many of us would have not studied Eureka Forbes as a investment idea, but we are all aware of the AquaGuard brand, right? So I hope, Priyansh, I have answered your question, right? If you have any further follow-up, you can let me know. Okay. So we have covered the investment thesis, we have covered the mental models, we have discussed the business in detail. Now let's talk about a few antithesis pointers also. So this is a business where I think during the start we were discussing, and Sanjay ji also made a very valid point that uh, water cooler is a category where there is a clear distinction of two kinds of consumers. So consumers at the lowest or the bottom of the pyramid, they can't afford uh, uh, these kind of products because it is too expensive for them, right? And that is why Eureka Forbes has came up with a product recently where the price is about 5,000 or 6,000 so that they can penetrate to the masses through that product. Because if you look at, again, these are simple things to check nowadays. Go to Amazon and just type water purifier. So you will find all these different brands, including Eureka Forbes. Most of their products are priced at 12,000, 14,000, 15,000, or even 20,000, right? So this is something new they are trying now. Let's see how it works because it is still early days. So the first problem is that the bottom of the pyramid people cannot afford And the if you talk about premiumization, the wealthy and the affluent households in the country, they have evolved and switched to far newer categories, which is a completely different system where they don't use these kind of uh, water purifiers anymore, right? So that is where innovation and obsolescence risk comes into play. And I think based on what the management is communicating through their communication is that the management is pretty aware of this thing and they are working on both the sides. So one way they are introducing products which are for the masses, making it affordable for them. They have drastically reduced their AMC charges also recently so that more and more people find it attractive to go for a AMC from Eureka Forbes rather than getting it done by some unorganized player and you run the risk of spoiling the machine, right? So that is one. And second is they are also building up their R&D pipeline and trying to innovate more and more products in the premiumization part where the wealthy and the affluent households and societies can also look at those products because that is those kind of products is where you will get more higher margin. The low end product will give you scale and the high end product will give you margin. And the mix of that is important for them to sustainably grow the business from here, right? I'll just check the chat. Also, they're piloting a rent. Yeah, that's also a very good thing. This is also an important part. Shivam, you mentioned it. Good that you brought that up. So, like something like we understand this from us. There are so many services which are now available, so many products which are now available as a service, right? Uh, like uh, like these IT SaaS companies where you don't need to own the product license. You can just pay as you use, and it's a win-win for both you and also the other company because the other company gets a recurring revenue and you as a consumer of those products and services, you don't have to make a huge investment upfront, right? The similar model they are exploring, but in the recent con call, the one which happened in June, I think it will take some time. Don't expect anything to materialize in FY25 also. Maybe from FY26 onwards, you will see some meaningful impact of that coming into the business. But that is one new business model which is very, very, very keen. The management is very keen to pilot and see if they can implement. So Vinodji asked, what is expected ROE or management guidance overall after a couple of years for that? So they have not made any guidance for ROE. Just give me 5-10 minutes. I'll come to the financial slide and I'll talk about an important aspect about ROE. So that will give you some idea. Okay. And then if you have any follow-up, Vinodji, you can ask again at that time. So we have covered the first point, which is obsolescence, innovation. The second point is competition. As of now, the competitive intensity is not very high in the organized space. Rather, we have seen the HUL is exiting the space. But as this space grows, you can expect more and more competition to come in. And think of it in this way. There are consumer durable companies where they have all the capabilities to start this kind of like HUL out of nowhere just immediately started this when they saw some growth in this. They couldn't scale it up or they couldn't drive the margin to their liking and they shut it down. That's a different matter. But for a consumer durable company to add a product like this doesn't take much time. So if you are tracking a company like Eureka Forbes or thinking of investing in it, you have to closely track competition. As of now, competition may not be too high, but in the future, that could be a problem. The key man risk, again, even though the key man is not the promoter here, but the key man over here is Mr. Pratik Kota. He has been very instrumental in the last 1 year, and it is very much evident in what is there. But you will also have to understand that Pratik Kota in his career has changed the ship multiple times. So you can't expect him to be there, say, 5 years, 7 years, 10 years down the line. He may be, as in, I don't want to predict that he'll not be there. One thing which gives us some confidence is that even before joining Eureka Forbes, he wrote a very popular tweet, which was very well, which went viral, where he said that I am starting a quasi entrepreneurial journey. And he has got some decent stake in the company as well. So that gives me some idea that probably his stay in this company can be probably a long term. But given by what he has done in the past, you never know. Something can happen, or maybe if he is unable to execute the plans as per what he has envisaged till now, then that could be a big risk, because he has been the one person who has been very instrumental in bringing the changes, the positive changes which has happened in the last 1.5 years. Okay. Next hai promoter exit again. So as we have seen in the history portion that पहले टाटा था, फिर टाटा से चापुर जी पोलन जी को गया, फिर वहां से these guys came. Now these people are not traditional promoters. They are private equity players. They run a fund which has a finite life, and the main thing or main objective of that fund is to get good returns. So because you have a finite life, you don't think very long term. So you can expect promoter exiting or cashing out as and when the stock does well. But I have seen there are so many other companies also where, because of this reason, the market generally look at those companies with suspicion that there will be a huge supply of shares coming from the promoter side, which will cap the upside. But I don't want to give any one or two names here, but there are umpteen number of examples where the erstwhile PE or VC players kept on exiting, but the stock continued to do well because with each supply, there were new demand coming in, or people, or there were institutions or large investors or HNI investors ready to absorb those kind of supply. And then the new journey for the business starts. So the promoter exit thing can be a overhang in the short term, but in the long term, basically how the business does, how the management executes matter more, right? Change in consumer taste style. Again, I discussed a part of it in the obsolescence and innovation point, where if the consumers, uh, uh, where I said that you don't know how things will pan out, how consumers move. So a part of the consumers have moved to a completely different level. So the company has to catch up to that, right? But then there could be a completely different thing where the company has no control. So for example, let's take the example of Gillette, right? So Gillette had a fantastic business for more than a century, and their main model was that they will not make much money on the razor. They will make money on the successive usage of blades. So their blades are obscenely priced, right? Now, what has happened over the last, say, specifically over the last 4 or 5 years? People have just, I am probably not the right example here because I generally shave a lot, but most people have just stopped shaving. They keep a beard, or they'll just probably trim their beard if required, but they don't go for shaving, right? Similarly, something like that can happen for the water purifying industry as well, where who knows if the government comes up with a plan where the source at the source place only the water gets purified in such a good way that you don't need water purifier at home at all, right? Or maybe some new technology comes where you don't need water purifiers at all, so consumers will just stop using it. So these kind of risks are always there. And the last and the most important part, even though I've mentioned it in the last, but I think this is the biggest risk if they don't fix their service. Because if you go online, you don't need to go online. You just talk to a few friends of yours who have taken Eureka Forbes water purifier. You will always hear them complaining about the service problem, right? First of all, their AMC over the years have been very, very expensive. And then when you actually need them to come and repair your product, they don't do it. And you are in for a big surprise, negative surprise, right? So I found this 1 year old Reddit note, which Reddit post, which highlights some of the problems with the service angle on Eureka Forbes. Okay, I'll not read the whole thing. You can read it at your leisure later on by looking at the recording. But the point over here is you can see, or you must appreciate that if there is one problem which they have to fix immediately, it is the service problem. And the customer reviews have been very, very, very horrible. And the new management, as per my limited reading and understanding of the management, is that they are fully aware of this problem and they are taking the necessary steps already. But these things take time. I personally think these are solvable problems. It's not that it cannot be solved, but it cannot be solved overnight. You need to work hard. You have to make the changes, uh, not just at the procedural level and at your executive level, but it is more about the behavioral aspect of people who are serving from the company side and also people who are availing this service. So it will take time, but there are some green shoots which are happening. They have been very, very, very active now on the online part, where earlier where less than 30% of queries used to be solved through online medium. In FY24, they have reached 75%. So now 75% of their queries gets resolved without the technician needing to come to the place and solve it. So it gets solved either on phone or either on the app which they have introduced. Okay. So now comes, it's a very new company. As a newly listed company, there are only 3 years of financials. And you can see a very clear trend of sales increasing slowly, EBITDA margining, EBITDA expanding. Because of that, PAT also expanding, and they are producing good cash flow. As you can see CFO and PAT, that also tells you a lot. Even though the book profit is only 92 crores, the cash flow from operation is 195 crores. And cash is what matters more, right? And why the cash flow is more? Because they have a negative working capital business. ROE, if you look at screener, it will look abysmally low. But in case of ROE, understand that they are sitting on a 2000 crore goodwill. Now, if you remove that goodwill from the books, ROE will start looking much better than. I'm not saying ROE without the goodwill, if you calculate ROE, it will become very attractive, but it will definitely look much better than what it is looking now. And given the kind of changes they are doing in the business and the kind of growth you can expect going forward, next 1 or 2 years, if you see if you adjust for the goodwill part, the ROE will become very, very attractive because incremental ROEs on their growth will be infinite. I should not say infinite, but will be crazy like 100%, right? I would request people who are not understanding this part of goodwill, you have to remove the goodwill. Long back, I think in 2021, uh, I presented on ROE in the Triple SK Pathshala, where we very in detail we explained how companies which have either large cash on their books or have a high goodwill on their books, their book or accounting ROE is very depressed, but their economic ROE is much better than what the accounting ROE suggests. So on a screener, they they cannot make this distinction. They just pull in data from the exchange filing. But as investors, we can't just base our investment only on what we see on screener. Screener solves a lot of our problem. We get tons of data from there, but we can't just look at that data and assume that everything as per the screener is only we have to use. You have to use your own mind and understand why ROE is low. When I'm talking about the business being so good, how can ROE be so low? Right? Of course, there were inefficiencies in the past, but the core business ROE should be very good, right? And that you will understand once you make these little adjustment and understand that it will further improve going forward because as you aggressively expand in new categories, your volume growth goes up, and not just volume growth. With that volume growth, you will also see a larger amount of AMC, the annual maintenance contracts kicking in, which will further give a boost to the negative working capital which they are already having, right? I think there are a few questions. Let me just check. So Naveen asks, any guidance by management regarding approach to premiumization in the water purifier market, considering the existing presence of high-end products such as alkaline-based water purifiers and ionizers? So Naveen, that's a very good question. And actually, what they've said is that they are definitely working, and I covered that already in the previous slides, that they're definitely working simultaneously on both the themes, where they'll at one end they will look at the people at the bottom of the pyramid who can and make these water coolers, water purifiers affordable for them. And then at the higher end, they are also looking at making products. They have not share as of now how much of their focus will be only on alkaline based or ionizers, but they have definitely worked towards introducing these products. And in fact, in the last quarter, they have also commented that they have reached, they have got good growth in those kind of products. So this will be another margin lever for them when you launch these kinds of premiumized products, where the wealthy and the affluent society or section of the society will be able to buy them, find value in them, and company will get higher margin. Okay. I think there's one more question by Priyansh. Priyansh has again given me a direct question. So just give me a minute. I'll just. So Priyansh asked, why has sales increased 7x from 2022 to 2023? So in see, 2022 was basically a COVID year. You have to understand, maximum part of the year was COVID. Plus, because they were having this kind of agreement between the ownership was changing. So there also the business was not working to their full potential. In fact, you should understand from this perspective. In FY18, they had 3,000 crore of sales. So even now, they are not, they have not reached the pre-COVID stage, right? So there is huge scope from that perspective. Okay, I think there are no more questions. I move to the next slide then. Now, this is one thing which piqued my interest when I was going through the annual reports, going through the. So we should always go to the notes because many times the problems or the concerns of the companies are hidden in some notes like this. Okay. So, and again, when you look at different businesses, you will again understand the pattern. And I could see this because I have already seen this pattern in a different company. I'll come to that, but let me first explain what is happening here. So what the management is saying, I'll read out this portion because I think this is important. They say that remaining performance obligation towards rendering of maintenance contracts as at the end as at the year end is recognized as income received in advance and presented in other liabilities. It's just that you are getting a deferred revenue. What is a deferred revenue? Where you get the cash from the customer in advance. Okay, you can either call it deferred revenue or revenue in advance, whatever works with you. But it is basically money you have received from customers in advance, but you have not received it only for goods or services which you will provide in this year. You have received it for something where you will provide them service or products for the next, say, 1 year, 2 year, 3 year, or whatever be the term period, right? Then what happens is that it helps you in your working capital because all the money you have got. Let me explain with a very simple example. In Mission Smile membership, we have 1 year, 3 year, 5 year membership, right? If I take membership of, if any one of our members take 5-year membership, I technically, that 5-year membership money which I am getting on day one is not the revenue for, is the total money cannot be the revenue for the first year. Ideally, I should amortize that that whole amount. Say, for example, 50,000 is the membership fees for 5 years. I can only book 10,000 in the first year, then 10,000 in the second year, and 10,000 in all the 5 years. That is the ideal way of booking of revenues. But in the year one, in the liability side, it will shown as either deferred revenue or income received in advance. Okay. The same thing happens with Eureka Forbes when they do these AMC contracts, where the maintenance contracts they have their customers have signed in for 1 year, 2 year, 3 year, or maybe even 4 year. I think 1 to 4 is their target, is their terms. What they have written over here is that see, they have written the service period ranges from 1 year to 4 years. And management believes that 77% pertaining to remaining obligation as of the year ended 31st March 2023 will be recognized as revenue during the next financial year. So management essentially says that whatever advance revenues I've got, 77% of that I will recognize in the next financial year, which means this financial, this I have taken from FY23 annual report. FY24 annual report has still not come. So management in FY23 is saying that whatever outstanding or the advance amount they have received, 77% they will book in FY24. Now, this is something which is a gray area. Why it is a gray area? Because it cannot be that 77%, because if anybody is taking a membership, is taking a service contract, he will take, if he is taking for 4 years or 3 years or 2 years or whatever, it has to be proportionately allocated. The same problem was there with a company called Club Mahindra or Mahindra Holiday Resort. They sell membership for 25 years. Pre-COVID era, in fact, in pre-FY19, what they used to do, they used to say that all our efforts to make the sale is all up, is front loaded. In the year one, when we acquire the customer, we do a lot of, we make a lot of efforts. We do a lot of marketing. We lure them with cruise, free cruise holiday or iPhones. So all these are expensive for us. So whatever we get as the membership fees for 25 years, 60% of that we will recognize in the first year itself, and the remaining 40% we will amortize over the 25 years period. That is what they used to do before FY19. In FY19, the accounting regulations were very clear, made very clear on this point, where they said that you can't do that. You have to amortize the whole amount over the 25 years. So if you go back and check Club Mahindra's FY19 performance, from FY18 to FY19, there was a huge drop because of just that. I think something like that can happen in this also, where, for example, right now in their revenues, probably they are using aggressive accounting, and revenue is a little high because they are probably putting more a higher percentage of the maintenance contract in the subsequent year, and they have not shared any clarity on that. That is one aspect. Okay, so maybe aggressive revenue recognition is done at their end. We'll get more clarity when we get the FY24 annual report, and also maybe when we attend the con call for the next of this quarter, Q1. Maybe we can ask the management and we'll get more clarity on that. But till then, this is a gray area we should keep in mind. So this is one side of the story. The other side of the story is that whatever they have done with the accounting, one thing doesn't change is that cash flow is intact, right? So the business model is very good. And from a valuation of the company, if you look at cash flow, you have to look at cash flow from a valuation perspective. So from cash flow perspective, we don't need to worry about anything. The only adjustment we may have to do in the future, once we get some clarity from the management, is that we may have to, when we value companies like this, maybe you will have to discount some of the revenues because of this aggressive revenue recognition, and then use the multiple, right? I hope I've been able to make this clear for you, right? Okay. So now in valuation, before sharing what we have done, and all our members who have been attending or going through our presentation, you have already seen that we use very simple models. We don't do detailed DCF calculation. But recently we came across a Kotak institutional research report on Eureka Forbes, where they have done DCF till FY 2050. And they are saying that the water purifier market penetration will go up from 5% in FY22 to 30% in FY 2050. See, one way of looking at this kind of forecast is that ideally DCF forecast should be done for a long period of time. Doing a 2, 3 year, 5 year, or even 10-year DCF forecast is of no use. Okay, why I will say no use? Because a major part of your value will come from the terminal value which you arrive after 10 years. Because most of the value of the company will be beyond 10 years. And that is the only reason we at SmartSync Services, we do not use elaborate DCF models. We understand the DCF thing, and we have the DCF frame of mind, wherein we try to understand from a cash flow perspective how big the cash flow could be going forward, 3 year, 5 year, 10 year down the line. But we don't do a valuation exercise where we try to assume what will be the discount rate, what would be the growth rate, what would be the penetration of water purifiers, because then it's like a crystal ball gaze. Nobody knows, right, what is going to be there in the future. So we have no certainty like this report. So what they have done a detailed exercise. Again, I'm not criticizing them. What I'm trying to say is that the exercise, if you do a DCF, you have to do a DCF like this only. You take a very long term. But taking a long-term DCF has its own limitation, because you are making a lot of assumptions, and a small change in the assumption can completely change the whole model. So after doing all these things, they're saying that DCF implies a December 2024 fair value of 670, right? So from that aspect, there is no scope in the business. As in, you're not buying, if you're a long-term investor, you don't buy for just a 15, 20%, 30% increase in share price, right? So that is what Kotak Securities say. But we have done a very simple calculation. Our assumption is that on a base case, at least you can assume sales to grow at 10%. EBITDA margin in FY29 should be somewhere around 20%. And PAT margin should be around 15%. Assuming that the CFO by EBITDA remains the same, the company can produce something like 700 crore of cash flow from operation and about 650 crores of FCF. Now, we may be completely wrong on this. They can do much better than this also. They can probably do less than that. But this is a far more simplistic model. And it is again conservative because we have taken only 10% sales growth. This has an upside risk rather than a downside risk. Because if sales grow at 15% or 20%, the valuation can go multifold from there. Now, 9,500 crore is the current market cap. So if you take from FY29 sales perspective, even at forward, 5-year forward, the stock is trading at close to 2.5, 2.7 times sales. When you look at EBITDA, it is trading at somewhere around 12 times, 13 times EBITDA. PAT would be somewhere around 20 times P, you can say, right? But when you look at cash flow, it starts looking very attractive. Even if you look at the TTM numbers, so if you look at cash flow from operation, which is about 195 crores, so if 10,000 by 20, actually it is looking at 50 times cash flow from operation when you look at the TTM numbers. But when you look at the 5-year forward number figure, it starts looking a little more attractive. At this juncture, with this business, the only problem we find or only concern we have is the valuation. We have, based on what we have discussed till now, the business looks very good. The management in place is top class. And they have very soon started executing also in the right way. So we at SmartSync will definitely have this business in our watch list. Because of volatility in the market, if we get it at a decent valuation, and what would be a decent valuation? I would say somewhere close to the valuation at which it was listed. So say, for example, if we get somewhere around 5,000 or 5,000, somewhere between 5,000 to 6,000 crore valuation in the next, say, few months, then we may look at it from an investment perspective. But at the current valuation, we will only buy if in FY25 market, the management surprises us with their execution. If the growth comes, so in our assumption, the CAGR is 10%. Say, for example, in FY25, they do growth of 15%, 20% or 25%. Then we will again revisit our valuation numbers. Okay. So these are the closing thoughts. One may argue on the valuation, but there is no confusion on the quality of the business. High quality business, top quality management, strong balance sheet and ROE. And there is a huge scope for ROE expansion. The only thing we have to keep watching is, can they execute well, right? So that's pretty much sums up our thesis on Eureka Forbes. Do let us know if you have any thoughts, any questions. We are open to discuss now also. But I see no questions on the chat box and I don't see any hands being raised. So I think it was fairly long presentation, close to 1.5 hours or maybe 1 hour 45 minutes. So thank you so much for your patience, and some of the questions which you have asked was also very useful. But don't restrict yourself to asking questions only now. Even in future, if you have any question related to business, do reach out to us, because when you ask question, it helps us also to look at the business from a different angle. So do come up with your questions or thoughts. That's it from my side. So thank you so much, everyone, and have a nice weekend. Bye. तो आशा करता हूं कि आपको ये वीडियो बहुत पसंद आई होगी, और जैसा कि मैंने स्टार्टिंग में बोला था कि ये जरूर ध्यान रखिए कि आज आपने ये वीडियो देखा है, इमीडिएटली स्टॉक कैसे परफॉर्म करता है या रिजल्ट्स कैसे आते हैं वो मैटर ज्यादा नहीं करते। मैटर ज्यादा ये करते हैं कि आप अपना एक थीसिस बना लो कि इस बिजनेस में क्या मल्टीपल लीवर्स है विच कैन वर्क इन देयर फेवर, एंड व्हाट आर द रिस्क विच कैन गो रॉन्ग फॉर देम, एंड आप इसको लॉन्ग टर्म में उस तरह से ट्रैक कर सकते हैं। राइट, बेस्ड ऑन दोज पैरामीटर्स आपको जब भी ठीक लगे, वैल्यूएशन कंफर्टेबल लगे, उसके हिसाब से आप इसमें पोजीशन बनाओ या ना बनाओ वो आपका है। बट हम ऑन दिस प्लेटफॉर्म कभी भी रेकमेंड नहीं करते हैं, एंड एज अ सेबी रजिस्टर्ड इन्वेस्टमेंट एडवाइजर आई एम मेकिंग अनदर डिस्क्लोजर अगेन कि आई एम नॉट इन्वेस्टेड इन द बिजनेस, नीदर हैव वी रिकमेंडेड दिस स्टॉक टू आवर क्लाइंट्स एज ऑन द डेट ऑफ दिस वीडियो। आशा करता हूं कि हमेशा की तरह आपको ये वीडियो भी पसंद आए, और हमारे YouTube चैनल में कमेंट सेक्शन में जरूर बताएं कि आपको और कौन सी कंपनीज के ऊपर में वीडियो चाहिए हमारे तरफ से। हम कोशिश करेंगे कि सारी के सारी कंपनीज कवर करें जो कि हमें कमेंट्स में मिलते हैं। विद दिस वी कम टू द एंड ऑफ द सेशन। थैंक यू।